Well, good to be back over here. Hello everybody, and let's go ahead and start. Let's touch on some other topic today besides technical analysis and technical patterns and money management that we've been going through. Correlations between currencies. Correlations between different currencies, correlations of currencies with other markets, correlations of currencies between themselves. Interesting stuff. Let's start off with, first and foremost, let me show you this web application. This is one website that I use, the charts from NetDania. It's free charting software and it really is excellent. The website of NetDania. Okay, all right. Well, I've unhinged the chart. I've detached the chart from it. So this is the chart. It's an excellent charting software. It's free software. And it's live data, and you have some excellent facilities on it, as well as a large number of financial instruments. Okay, let's start off with one of the strongest correlations between currencies, and surprisingly, a lot of traders, especially new traders, are not aware of this, something which you should be aware of. I'm sure most of you must be knowing this. The correlation between Euro USD and the USD CHF. Now, whenever we talk about correlations, generally the correlations work or are effective on longer term time frames, like the daily. We take the daily as a standard. On smaller term time frames, maybe on the 1 hour, it's different. The frequency of movement is different. There is some noise, so the correlations may not be very strong. So we generally take on the daily time frame, comparing two currencies or a currency with another particular market. But for this one, for the Euro USD and the Euros USD CHF, it is the strongest correlation between all currencies, and it works across all time frames. First, let's have a look at this. So this is the Euro USD. The best part about this charting software on the NetDania, this is the daily time frame, is if you right click on the charts and you just do relative to, it gives you a comparison. So we'll do a relative to USD CHF. And there we go. You see, they are exact mirror images of each other. Absolute inverse correlation. It is, as I said, one of the strongest correlations of all the currencies between currencies. So if the Euro USD goes up, the USD CHF has to go down. Well, one of the reasons, of course, is that the USD is the first part of the pair in the USD CHF and the second part of the pair in the Euro USD. But even besides this, the fundamental factors come into view, and a lot of traders look at both these currencies for confirmations. Now, one point is, I do get a lot of questions saying that why shouldn't we take a trade on both of them? Well, you get two good trades. If you're going long on the Euro USD, you go short on the USD CHF. Number on the fundamental factors, well, let's put it this way. In fact, I'll address this once we go over the USD Index, that there's a third factor into consideration. There are some fundamental factors involved in this, and we will go over this. Right? So what you do is, if you're going long on the Euro USD, you should ideally go short on the USD CHF. You really cannot go long on both of them. You're probably losing up one trade, definitely. And if you take both trades, well, God forbid, or if you get a losing trade, which you do, so you'll have two losing trades, which is not good. So what I do generally is, if I'm looking at the Euro USD at some setup, let's say I get a buy signal for some reason, say I see a divergence there, and I subsequently go to the USD CHF and see if there is a sell signal also present there. If it is, it's a strong confirmation. If it is not, then it gives you kind of a warning that something is wrong somewhere, and maybe it may not work out. So maybe the divergence is not correct. So that's one of the best ways of using it. Now, as an example, let's do one thing. Let me change the time frames. Right? Let me go over this on a 5-minute time frame. This is something I normally do not recommend anybody trading on a 5-minute time frame, but just to, as a example or academic interest, let's see the correlations between these two. And as you can see, even on a 5-minute time frames, they are mirror images. Of course, as I said, the frequency is different. Here you have this one is the USD-CHF. The USD-CHF is little more volatile, somewhat more volatile than the Euro-USD. The Euro is considered to be a pretty stable currency comparatively. And as you can see that the Euro or the USD-CHF is comparatively a little more volatile. It's got larger movements as compared to the Euro-USD. So strongest correlation, right? So bottom line is, if you're long on the Euro-USD, do not go long on the USD-CHF also. You must ideally remain short or use it for a confirmation. The other strong correlations is, let's again go back on the daily time frame, is between the 4 major currencies. Now these 4 currencies, the Euro-USD, Gbp USD, AUD USD and the New Zealand USD. These are the only 4 currencies which have the USD as the second part of the pair. The rest, all the currencies of the world, any currency of any country, any cross pair involving the US dollar will always have the USD as the first part of the pair. It's only these 4 which are exceptions to the rule. So obviously, if they are exception to the rules, then if the USD is the second part of the pair, they would generally move in tandem. So let's have a look at this. If you do a correlation for the Euro-USD to the Gbp USD, you can definitely see that they move in tandem. And I'm talking about larger term time frames, daily onwards. Smaller term time frames, there will be different movements due to certain factors, fundamental factors, their own economies, some movements with cross pairs. But we are talking about longer term time frames. Let's also do a correlation to the Aussie dollar. Aussie. Once again, you can see here, of course, there are different colors. Maybe you may not be able to see the colors quite clearly, but the blue one is the Aussie. This green one is the GBP USD. The black is the Euro USD. And let's do a correlation to the New Zealand dollar also. Yeah, the New Zealand dollar in a light blue color. This is the New Zealand dollar. And as you can see, all of them generally move in tandem. So obviously, bottom line again for traders is, if you're going long on the GBP USD, do not take a short position on the Aussie USD. Now, not only on a larger term time frame, even on smaller term time frames, they tend to move together. You may have some opposing movements on smaller term time frames where prices may go against each other, but eventually they all settle on the general trend together. So this is another factor to be aware of. Now, as we saw, the Euro USD has got a very, very strong correlation with the USD CHF. Now, the 2 major currency pairs, the USD CHF and the USD CAD, the Canadian dollar, are very strongly correlated with these 4 majors. They generally have movements in opposition. So if you do a correlation here of the USD CHF, obviously we will see that the USD CHF moves in an opposite direction. Now, which one is the USD CHF over here? Is this one? No, it's 0.3318. Right. Anyway, whatever you can make out, what is the opposite part? Not this one, this one, this one. There are too many lines over here. Yeah, I suppose it's somewhat like this. So USD CHF, and if you do a correlation again to the USD Canadian dollar, the Canadian also moves in an opposite direction here. You can definitely see 2 opposite directions over here. So once again, the correlation, let's take the correlation with the USD CHF and the Canadian dollar, USD CAD. Obviously, with USD being the first part of the pair, they generally tend to move in tandem with different frequency of movements. So if you're long on the USD CHF and if you have an opposite move of you looking at a short on the USD Canadian dollar, you should not ideally take it, because one of them will definitely not work out. Right? So these are some correlations between currencies. You can always play around with this. Now, I have been looking at this, and there are some surprising correlations which one would have really not thought of. It's something which I came across, which was quite frankly a little surprising even for me. But looking at trading these instruments together, and I've noticed that, okay, this looks like they have similar movements. The Australian dollar, the AUD USD versus the Gbp Jpy. Was it the Gbp Jpy? It was the Euro JPY, I believe. I think it was the Gbp Jpy. It was the Gbp Jpy. There. They move in tandem. Now, why do you have 4 different pairs over here? The Australian dollar, the US dollar, the British pound, and the Japanese yen. And in spite of that, these 2 pairs, one cross currency and one major, move together. It is just from observing some certain movements, looking at some trades, and observe that, oh, this looks like the Aussie and the GBP, they generally seem to be moving together. So looked at the correlation. This is an excellent charting system where you can play around and look at correlations. The bottom line being, folks, is you should be aware of these. Anything which gives you a good second confirmation is always better. It gives you an edge. Finally, this is a business of probabilities. We are trading in probabilities. There is no guarantee for the outcome of your trade. Losing trades are a part of trading. And the more factors you put towards yourself, in favor of yourself, gives you that edge. Yes, Ahmed, that's exactly what I said. It's not all major currencies, because besides the USD, you also have cross pairs, right? Gbp Jpy, AUD Jpy, Euro CHF, which don't have the USD in common. So it's worth looking at the cross pairs versus the USD. But yes, if you have the USD as a pair, which is the pair in most major currencies, we just saw the AUD USD, Euro USD, GBP, and New Zealand USD, they definitely move together. Now, if you take some, let's say we just had a look at the USD CHF and the USD CAD. Let's say you take a major currency or currency of another world. Let's say you take the Mexican dollar, the Mexican currency for that matter. And if you compare that, you will definitely have, because the USD is the first part of the pair, but the correlation will not be so strong, because fundamentally they are affected by different factors. Major currencies are affected by a similar set of circumstances. So, as you said, major currencies will always be correlated. And let's go deeper into it. We'll put some more factors into it to give you a better idea. Now, beside these currencies, there is something called the US dollar index. A lot of traders are actually not aware of this. And of course, this is a longer term thing. But the USD index is something traders take to look. The USD index, it is an index which measures the performance of the US dollar. This is a basket of currencies. Now, this is a chart. If you can see this, this is the basket of currencies. The euro being the major part of 57% of the basket consists of the euro. The GBP, the JPY, the CHF, the CAD, etc., etc. So you have all these currencies. Now, since the euro is the largest part of the currency, which of course you had all these European countries merging into the euro, so which gave more weightage to the euro by per force. Obviously, the correlation of the USD index with the euro is very, very strong. Very similar to the USD CHF, which we saw. The USD index has got an absolute strong inverse correlation with the euro. Now, a lot of professional traders, instead of looking at the USD CHF to confirm a trade or a move on the euro USD, they look at the USD index, because the USD index is followed a lot in the currency futures market or in most of the future markets, as well as having a very strong correlation to the US equity markets, because it measures the performance of the US dollar versus the different currencies. And it's not only the euro, it's a basket of currencies. Now, unfortunately, the USD index charts are as a financial instrument is not available on most of the charting softwares. Fortunately, NetDania has the same thing. So let's go ahead with the USD index. Right, we are having a look at the USD index again on a daily time frame. On a daily time frame, if you do a correlation to the Euro USD, you can see again it has got very similar to the USD CHF that we looked at, a very strong inverse correlation. They are mirror images of each other. Now the USD index is something which is followed more often. Professional traders look more towards the USD index to gauge the strength of the USD index to estimate where the Euro USD would probably be. Once again, this is more on longer term time frames, but for this strong correlation, there is also a very strong correlation on shorter term time frames. Even on the 1 hour or so, you will find a lot of movements. For traders following the futures market, they keep an eye on the USD index, even on shorter term time frames, to estimate the strength or the momentums of the euro. So, which is very good. As I said, I know a lot of traders who trade in the futures, the currency futures, and for them the USD index becomes a major factor to be aware of. So this is another very strong correlation with the USD index. Right now, coming back to the question is, why does this work? Ahmed, the commodities, we are coming to the commodities, they are correlated. Yes, of course, commodities are. See, USD being still the reserve currency, it has a strong correlation with probably every financial instrument. But what we are looking at today is correlations which are very strong. Correlations which on a scale of 10 would rate about 8 to 9 out of 10. And commodities are correlated to other currencies, not the USD. USD also, definitely, but more to the other currencies. All right. So as a question of why does this work, or why do you have these kind of correlations? Well, USD equity index is inversely related to the US dollar. I don't know whether we have, we'll come back to when we go over the equity indices. We're having a look at some other correlations with different markets also. First, let's get down to the commodities. Now, the three currencies, the Australian dollar, the New Zealand dollar, and the Canadian dollar, they are known as commodity currencies for the simple reason that these countries are commodity producing nations. Australia is a gold producing nation, so is New Zealand. Canada is an oil producing nation, and the exports, the Canadian exports are completely dependent, I won't say dependent, are relied on crude oil. So obviously a movement in crude oil affects the Canadian dollar more than the effect of the US dollar. Right? So if you do a correlation, of course the Canadian dollar and the US dollar are pretty strongly correlated to each other due to different factors, but it is the movement of crude oil which affects the Canadian dollar more. Similarly with gold, gold has a stronger correlation with the Australian dollar than the US dollar. Right, let's have a look at that. Let's take gold. You have the gold spot. We have the spot gold over here in the spot market. This is a gold. You do a correlation to the USD index. We are measuring the US as a basket, what different currencies. You can definitely see that they are mirror images of each other. Obviously, and this is a fact. All of you are aware of this, that if the US dollar gains strength, gold generally moves down, and if gold gains strength, US dollar generally goes into a weakness area. There's also fundamental factors into play that money shifts position, or the large funds, they shift positions to safe assets, which gold along with the Swiss franc is considered to be a pretty safe asset today. Now let's do a comparison of gold to the Australian dollar. Right, you have gold and you have the Australian, and you will see that the correlation with these two is much stronger. They move in tandem together, of course different frequencies. So you can compare gold to the USD index as an opposing movement, as an inverse movement, but on longer term basis you would rather compare it to the Australian dollar. Stronger correlation. Similarly with New Zealand dollar, it's very similar to the Australian dollar. So gold and silver are more correlated to the Australian dollar. On the other hand, crude oil, now we don't have the exact crude oil component that is strengthens. If the value of crude oil decreases, the Canadian dollar weakens. And that's a simple fact. It's a simple economics, because Canada is an oil exporting nation. But here, since the Canadian dollar is the second part of the USD CAD, right? So it will have an inverse correlation. So if crude oil goes up, the USD CAD will go down. And this is a point of confusion which a lot of traders have. So something to be aware of. Let's do a relative to the Canadian dollar, USD CAD. Here, of course, the frequencies are different. The Canadian dollar is much more volatile. The crude oil here is much more volatile than crude. But you can definitely see the peaks and the valleys. You see this. You had Canadian dollar going up over here and crude oil dipping down over here. So there is an opposing relationship between this. Now, one of the major correlations that you have, we looked at the USD CAD, we looked at the USD CHF, right? The USD JPY, the yen pairs, are also supposed to be, or USD JPY particularly, are supposed to be correlated with the USD. So it should follow the USD CHF, it should follow the USD CAD. So USD gains strength, you have the USD, should have the USD JPY also moving. But this does not happen. Today the JPY has kind of detached itself from this strong correlation, and the yen pairs are more dependent on the US equity markets. Surprising factor, but the US equity markets have got a stronger bearing on the yen pairs than the USD by itself. This may have something to do with the carry trades, which has been going on for years together, and today the US dollar as part of the carry trade is out. Just as a brief fundamental here, the interest rates in Japan have been at 0% for almost more than 10 years. Right? Today in the US you have the interbank rates at 1% or less than 1%. But before the financial crisis, which happened about 3 years back, the US interest rates were also in the range of 3 to 4%. Right? So what investors would do, they would, or large funds, they would borrow money in yen where the interest rate is 0 and invest in the US dollar where you at least get a 3 to 4% interest, so which was what it was, which was the beginning of the carry trade. The carry trade was the strongest for the Australian dollar and the British pound, because at that time the interest rates for the British pound and the Australian dollar interbank rates were about 4 to 5%. Today the Australian dollar still stands at 4 to 5%. The British pound, of course, being caught up with the financial crisis, is on par with US, about the same rates. But the carry trades are still strong for the Australian dollar and the New Zealand dollar. So you will have investors or large funds investing in the pair AUD JPY, New Zealand JPY, and constantly remaining long. They would not go short because they get the benefit of interest between the two. Right? When you're trading a currency, you and me are retail traders, trade it in a very small term time frame. We still get the benefit of interest as swap. Large funds put in large amounts and they get the benefit of interest. If the value of the AUD JPY goes up, well, it's a good bonus. But a lot of institutes or hedge funds invest in these. Now, this is one of the reasons why the yen pairs is very strongly correlated with the US equity markets, because the funds are flowing into this. And US equity markets affects the US dollar, obviously, which affects the USD, the yen pairs. Let me show you this correlation and talk about, as currency traders, what we should be really aware of. This is the same things, commodities, that we looked at. Now, this is a chart of the Gbp Jpy versus the Dow Jones. Now, unfortunately, we don't have, there is a Dow Jones composite index here, which we'll have a look at. But the proper Dow Jones index is not present on Netdania. This I've taken from somewhere else. This is a daily time frame with the pound, yen, and the Dow Jones, and you can see that similarity, movement in tandem, completely in tandem. More than this, there is the 1 minute time frame. Now you'll be more than surprised, but even on a 1 minute, you can see the strong correlation which these two financial instruments are moving on. So you can see the correlations are very strong. Now, how does it relate to our trading? What do we need to keep in mind? One of the things the trader needs to keep in mind is do not open a new position, an intraday short-term position on any yen pair during the opening of the US session. Let's say, for example, on a 5-minute time frame. Now, I don't trade on smaller term time frames, but just as an example, let's say I get a bullish divergence. I see a good bullish divergence and I want to go long. It would not be advisable to open up a new pair on an intraday basis, or if you do, be very careful, follow up with your trades, take your profits as soon as possible out of the trade, because if the USD JPY is beginning to go up due to the bullish divergence, something happens in the equity markets and something spooks the Dow Jones. If the Dow falls, the USD JPY will fall regardless of your technical patterns. So it kind of throws all your technicals to the wind. So you have to be very, very careful of that. As far as longer term positions are concerned, if you are in a yen pair, let's say I am on a daily time frame, I am long on the Gbp Jpy. Then intraday fluctuations, a little bit you have to be careful, but longer term doesn't really matter so much. Yes, you have to keep into account when I'm taking a trade on a yen pair, more than looking at a correlation with another currency, I will look at the correlation with the Dow Jones and the S&P 500. So very, very important point. Right, let's get down. Let's see if we can see the correlations here. Let's see if we have some more instruments. You have indices, you have cross rates, you have metals, you have futures. Let's go to the indices. USA index, Dow Jones. Let's take the Dow Jones composite. Right, so we take the Dow Jones composite. We are on a daily time frame. Okay, this looks good. 4,600 here. That's close to the Dow. What actually we are looking at? Let's have a look at a correlation to the USD JPY, or the AUD JPY, or the Gbp Jpy, anything. Yen pairs generally move in tandem. All of them move in tandem. And as you can see, there is a very, very strong correlation. Right, so these are the factors as a trader you need to be aware of. Of course, if you're trading on shorter term time frames, the correlations, the effect of the correlations is slightly lower. If you're trading on longer term time frames, it's always better to have a larger picture in mind. But knowing these factors, you have this software, you can always go to NetDania at any time, this charting software, have a look at it, and well, you can play around with it. It's an excellent thing, and I have discovered a lot of correlations just by looking at this. As I said, it's always better to have an edge with you, and the more factors you put in your favor, the better it is. And lastly, let's have a look at the correlations with the yen pairs. This is rather obvious, of course, but once again, it's surprising that a lot of traders do not know this. And let's take it on the 1 hour. No, Nambir, there is actually nothing of that sort. If that was the case, then you would find a loophole in it, say, okay, the Dow Jones is going to lead, so I'm going to go short when the Dow Jones goes long. And probably you would become a millionaire by doing that, isn't it? The markets today, due to the electronic world, everything is so fast that everything happens in an instant. There are very rare cases where some circumstance leads to one financial instrument leading the way. Yes, there are a lot of traders who take advantage of this, and there's this arbitrage which is called. There are traders who do high frequency trading based on this concept, looking at the markets at one particular region and correlating it with another zone, and which is a fact. But I would, unless you are very nimble, you're very fast, I would not really recommend that. Yes, it is a way. USZR, let's just see, boy. Just give me one moment. USD JPY, let's do a correlation with Gbp Jpy, absolutely same with AUD JPY, not bad, with CAD JPY, absolutely, and CHF JPY, Euro JPY. Euro JPY is a major thing. As you can see, they are actually moving in tandem. So it just becomes an example, folks, and a lot of traders need to be aware of this, that any yen pair, you cannot go long on a Gbp Jpy and go short on a Euro JPY. It doesn't work. Simple things, but good to be aware of it. Now, let's have a look at USD ZAR. Okay, just one moment. We have cross rates. ZAR. Mhm. Doesn't look like it over here. I can't see. Nope. The South African rand, but you don't have. No, I don't see it here. Krona, dollar, dirham, peso, ringgit. Not here. If it was South African rand, yes, South African rand is there. Let's have a look. You want South African rand with gold? There you go. So, oops. Let's take it as an instrument. Let's take gold and do a correlation with the South African rand. Oops. So you need with, oh, you have the ZAR over here. Oops. Here, do you have USD ZAR? Oh, there it is. Sorry about that. There you go. So what can you make out? Mirror images, absolute mirror images. That's right. Inverse correlation, very, very strong inverse correlation on everywhere. And this is on a 1 hour. I'm sorry, we are still on the 1 hour, but a very strong correlation even on the 1 hour. There you go, Boyke. Alright folks, so I think that was about it. I think it was very important to share this with you as a correlation. A trader needs to be aware of a lot of factors. Anything which puts the odds in your favor. Right, so be aware of this. Keep in mind the correlations that you have about different currencies with different markets, and then take your trades. And daily, well, you can have a look at the daily also. Let's go on this on a daily and do the correlations with USD ZAR. There you go, pretty strong, very, very much strong. Actually, the correlation seems to be breaking on over here. If you look at this here, right, you have them kind of moving in tandem. On the daily time frame, they're moving in tandem, both of them. This is gold, is a black one. This is a USD ZAR. And if it's going down, gold is also going down. Well, it seems to be moving in tandem on a longer term time frame together. Well, all right, folks. Thank you very much. I hope you liked it. Well, clever, good. I'm glad at least there's something which will help you in your trading. Be aware of it. And once again, if you have any questions, yes, we still do have, but I've completed everything. Do you want me to just talk? Should I talk about my cat? Or should I talk about myself? Silver, Sanjay, is more with the commodity currencies, the Australian dollar and the New Zealand dollar, and with gold by itself. Right. Well, just once again, since we have a little bit of time, we have the next workshop coming up in London on 16th, 17th November, where we discuss a lot of things. So feel free, if you're interested, anybody from local UK, Europe, anybody wanting to have a look at that, feel free to hop in, have a look. This is my email. If you have any questions about the webinar, about anything else, feel free to let me know. I'm always here. Let's get back to the charts. Oops, what happened to the workshop? Anyway, it's on 16th. The web page is being upgraded a little. So there you go, 16th, 17th of February next month. It's free, Sanjay. The Netania is free. It's an excellent thing. That doesn't happen, Ahmed. What happens is correlation no longer works. That's not possible. So long as the financial instruments are there, so long as the currencies move as per the fundamentals, the correlations will always exist. Now, yes, what you can do is when they go out of tune, when you look at a correlation, when let's say the Euro USD and the USD CHF are supposed to be on absolute mirror images of each other, and there's sometimes when they don't match up to it, then that becomes a trading opportunity, because you know eventually that they will go back to their respective paths. So it becomes a trading opportunity. Yeah, but how fundamental can it get? Until and unless you look at the euro collapsing as a currency, right? Which I don't see it happening. It's withheld due to, in spite of all the financial problems, it's still going strong. It's not in any danger of being scrapped, for whatever people might say. But until and unless you have a major shift in the currency world somewhere, I don't think these correlations are going to change. Sophie, that's a good question. Euro GBP, yes, there is a strong correlation with the instruments of the Euro GBP, not between themselves, but Euro GBP versus the GBP CHF. Here's the GBP CHF. Once again, they are absolute mirror images of each other. So, again, something to keep in mind. If you're trading the Euro GBP, it would be worth your while to have a look at the GBP CHF to see if you have something opposing. Once again, just be careful. They do not really work on a shorter term time frame so well. There are different movements. But longer term time frames, if you want to determine a trend, it's well worth looking at these. Alright, folks. So play around with it. You have a long list of currencies over here. Take something, take the Euro CAD and give it a correlation with the CAD JPY for that matter, and see what relationships it gives you. Thank you, Eamon. Alright, folks, we'll wind up early because very frankly, I honestly have nothing else to say. If there is anything. Yes, bullish pips, this net denier that I was talking about, it is free. Now, it's an excellent thing. You just go to this website, it's just netdenier.com, and you have a look at, click on finance charts over there. There you go, net denier. Just click on finance charts, you'll have sections over there. You get this one over there. It's for free. It's live data. It's got a lot of studies. It's got everything. It's got lines. It's got a lot of facilities. So one of the best charting platforms that I have ever come across. And quite frankly, I have been using this for almost since the time I started trading Forex. I did not start with the MetaTrader platform. Today you have demo in the MT4, all brokers give you, but that at that time, about 8-9 years back, 10 years back, NetDenier was the only one which had all the studies at free software with all the facilities. So I have been a fan of NetDenier right since those days, and they have improved over time. All right, folks, so that's it, and I'll see you next week. Have a good trading week. Have a nice weekend. And of course, any questions, feel free to get back. I'm always around. Goodbye. Thank you for being over here. And well, always nice to be here. Good to talk to you folks. I'll see you folks later.